Hello and welcome to Gold and Silver Assets. I'm Diora and it's Sunday the 28th of February 2021. We had a great viewer question a couple of weeks ago about whether I thought gold could become obsolete. Is it really just an old-fashioned relic? Gold has historically been considered to be money because of its unique properties as shown here. Now, Mike Maloney has a great video that covers each of these in detail in his series, The Hidden Secrets of Money. So I'm not going to go over that over here, but I think we can all agree gold is money. In fact, gold has been considered to be money for thousands of years. Shown here is what's thought to be the oldest coin in the world. This coin is an alloy of gold and silver and was created in the ancient kingdom of Lydia around 3,000 years ago. Okay, so we've established that gold has been money for thousands of years. Why would anyone think it could become obsolete? Well, here are the arguments that I've come across in the past. One is that gold is just a shiny, pretty metal that has limited utility. Look, yes, there are some industrial applications for gold, but they're pretty small compared to other metals. But is that enough to conclude obsolescence? I don't think so. Isn't it strange how people expend a lot of time, effort and energy to extract gold from the depths of the earth? They bring it up, refine it, only to lock it away in underground vaults back in the depths of the earth again. Look, I don't think the industrial utility is of much relevance here. It's actually the financial utility that's important. Another common argument is that it doesn't pay any interest. But look, I don't think that's its job. Even if it was, in this day and age, it's not as if cash pays any interest either. No, look, gold's principal job is to store value and maintain purchasing power. One argument that I think does have some merit is that gold will be obsolete if people aren't interested in it. After all, money is a psychological phenomenon, but more on that a little bit later. And then, of course, gold might become obsolete if alternatives become widely used. The thing is, alternatives have come and gone throughout history, yet gold has prevailed. The point of today's discussion is not to discuss the merits and flaws of alternatives to gold. It's to explain why I don't think gold will become irrelevant or obsolete. That brings us to the Lindy effect, which originated in 1964 by Albert Goldman and was later popularised by Mandelbrot and Taleb. This is the theory that the future life expectancy of some non-perishable things like technology or ideas is proportional to their current age, i.e., the longer it has survived, the longer it's likely to survive. This is a kind of aging in reverse. One example would be if a book has been in print for 40 years, it's likely to remain in print for another 40 years. Similarly, it could be said that gold has been a store of value for over 4,000 years, and so we can reasonably expect it to continue to be a store of value for the next 4,000 years. Historically, gold has fallen in and out of favour, but it's never really disappeared. Money is a psychological phenomenon, and so it will fluctuate in popularity. Currently, the majority of the population in Western societies have little knowledge about gold, and it's seen as being old-fashioned. I've even heard some call it the currency of the elderly. Ouch! I think that all stems from the schooling system and the financial system wanting to herd people into paper. There are also cultural differences. Eastern countries such as China, India and the Middle East still hold gold in high regard. You only need to look at the volumes of gold imported into the East to see that. Gold has been steadily flowing from the West to the East for decades. And it's not just the central banks or the rich that own gold in the East. Families in small villages store their wealth in gold. If you told these villagers about paper gold, if you advise them to buy an ETF, they'll just laugh in your face. Part of the reason for that is in those areas, there is a lack of trust in the currency and the banking system. In the West, people seem to have a lot of trust in these things. Well, for now anyway. A few years ago, I was actually in Abu Dhabi for work and came across this picture in a hotel. Basically, it's a gold ATM. What you do is you insert your cash or your card and out pops a bar of gold bullion. I just thought that was quite interesting. I've never seen that anywhere else, only in the East. I wonder if that's still there. One of the advantages of physical gold is the privacy that it offers. One of the reasons that I think gold is out of favour at the moment is that privacy is undervalued these days. I've had discussions with this about people in their late 20s who I consider these guys to be quite smart and intelligent people. And however, when I discuss these things with them, it's very clear to me that loss of privacy just doesn't bother them. Other factors such as convenience and utility override privacy. For me, I think it requires an understanding of privacy and freedom to understand gold. I also think that gold represents a form of independence. Unlike most things these days, there is no counterparty with gold. It doesn't require any actions at all to maintain its value. It's independent of electricity, and it doesn't require a network to keep the show on the road. Gold just always remains gold. In fact, gold from 100 or even 1,000 years ago is no different to the gold now. It just never changes, and it can't be destroyed at the molecular level. Fire can only melt it, but it can't destroy it. Gold won't corrode, it won't rust or tarnish, and it endures time. One of the things I also admire about physical gold is its sheer simplicity. It doesn't require any complicated contracts or lawyers. When you hold it, you don't require any special skills or knowledge either. To me, it seems like gold is the simplest solution to a complex problem. To conclude, any form of money has its advantages and disadvantages, and gold is no different from that. But nothing's perfect, and that's why different forms of money can coexist. But the fact is that gold has stood the test of time, and I believe it will continue to be money. I believe that gold represents privacy, independence, and freedom. One of the reasons that I think gold has gone out of favour is that these values have become eroded over time. Society these days doesn't seem to appreciate these things as much. If the majority of individuals globally discard these values, that is when gold will become obsolete. When I hear people talking about gold being just a pretty shiny metal and just another thing to be traded, that to me tells me that their knowledge of gold is very superficial. I think gold has a much deeper meaning and significance. Next up, the market update. We've been hearing all kinds of doom and gloom about precious metals. People are talking about how it's all over, and I've even heard people say, now we're in bear market territory, things are bad. But I'm not buying that, and I'll tell you why. So let's first of all start with silver priced in US dollars on the daily scale. And as you can see, we still remain in an uptrend. Until this line breaks, I'm still going to be feeling pretty positive. As we saw in the last trading day, price was slapped down. It was actually I was quite hopeful up here because price was edging upwards and bumping up against that 28 level. And of course, when price hits those kinds of levels very rapidly, it's of course expected for it to get slapped back down again because it's just too fast, too much, too soon. But this was looking quite promising. But anyway, price turned down, it got rejected from that level and came down to this 26 level and bounced off of that again. Now look, it could still go below that. This line here, which is just above 25-ish over here, that's the level that we really want to watch. If it drops below that, then yes, I'll start getting nervous, and I'm particularly nervous if it goes below 24. But let's see if that holds for now. But at the moment, I'm not seeing anything here at the moment that makes me think this is a bearish sign. And of course, I'm sure you've all heard about all the things that are going on in terms of physical deliveries and shortages of 1,000-ounce bars now. So it's not just at the retail level. So I'm not throwing in the towel with this. I still think this is in a bull market and we remain in an uptrend. So until that changes, let's stick with that view. Let's move on to gold, priced in US dollars on the monthly scale. And this is just so that we can just stand back and have another, overview of this. And, price did move up pretty rapidly here in a short time. We had a large move there, and particularly that last move there was pretty rapid there, and there was a bit of euphoria, especially when we exceeded that $2,000 level. And so having a rest is only natural. And, this could easily be considered as a flag formation, in which case, that would be bullish if price does turn up there and carries on upwards. But of course, this could be multiple other things as well. Now, I'm still on the bullish side of this, as you know. And, if we look back here, even before 2008, there was a much longer price rise from the year 2000 actually going upwards here. And again, we've got a similar kind of appearance over here. And that actually lasted longer than what we had here. Now, you might say, oh, well, this is a big red candle coming down here. That looks pretty nasty. But, look over here. Back in 2008 here, we had a massive red candle there. And things turned around pretty nicely there. So, it's, it is within the realms of possibility for price to turn around from here. Certainly on the monthly scale. The other thing that it makes me not too worried is that we've got this curvature here, and I can't draw it very well freehand, but this is well within the curvature of the price move so far. I've actually used SPSS to plug in these major lows here, and I've been able to get an equation for this curve, and this is still within that curve. I haven't been able to plot it out, but I've got the values in a table. But yeah, this curvature hasn't broken yet. So again, on the monthly scale, I'm still not too worried. The reason is that this price action still lies within that bullish model that we're looking at. Okay, and let's zoom into gold in US dollars on the daily scale. And this gives us a closer look at what looks like the flag pattern on the monthly scale. Of course, this is very long and painful, and when you're in it, it can just seem like it goes on forever. And it kind of feels like it has, hasn't it? But if we go back and look at that monthly chart, it actually looks like a tiny little blip. If you look at that 2008, 2009 action, it's barely noticeable in the massive uptrend that was there. And I suspect this might be similar. Okay, so what happened? Well, price broke through that support level. Oh dear. Does that mean it's a disaster? No, because we're still within this trend line here. If that trend line breaks, then yeah, I think we've got massive problems ahead. But remember last week where we spoke about this negative correlation with silver? So as we, for those of you who haven't seen last week's video, take a look at that because we just talk about this in a bit more detail. But I just want to extend that discussion a little bit more. We had lots of good discussions in the comment section last week, giving a more detailed explanation of why this occurs, why you occasionally get these negative correlations. And I thought that was excellent. We also had a viewer that quite rightly commented that just because this flips to a positive correlation doesn't mean that means price is going to go up, because all it means is that gold and silver are moving in the same direction. That's all that means. And so that could mean that both gold and silver will drop as well. And that's exactly what happened. But I don't think that's the whole story going on here. And looking back at the previous time, certainly in the last 3 or 4 years, it's shown a distinct pattern. So what we'll do is we'll go back and look at the times where this correlation went negative and then what happened when it flipped back to positive. Okay, so this is going back to 2018 and I've drawn a green line here to show where it had flipped back to positive over here. And you can see that even when it was in positive territory, initially price did drop and then it turned around and started moving up. Then we had a similar event in May 2019. So this was a correction. It kind of looks like a smaller version of what we've got now, actually. But here, this is the spot where price was, the correlation, sorry, was neutral, and then it went positive after that. And again, you see price dipped a little bit and then turned around. And then, of course, we had June 2020. And again, here we got that little negative correlation there. This was after a kind of sideways move, really, rather than a correction there. And then after that, price dipped down a little bit before moving upwards substantially. Now, you might say, oh, well, you've just cherry-picked a few examples. And if you go further back, you won't necessarily see the same thing. And that is correct to some extent. I have looked back at quite a few examples of where we've seen negative correlations. And one of the things that I've noticed is that it tends to happen either at local peaks or local troughs. And obviously, if we look at the chart at the moment, we're certainly not at a peak. We are at a trough when that happened. And so I'm still thinking that this has some validity to it. And, you know, I think it does have some merit. But let's see if it works. So let's just quickly go back to that gold US dollar chart. Where do we think we're going from here? Have we hit a bottom? Well, the promising thing is that we've got a lower wick. I think if price had just dumped and stayed down and we had a solid end of the candle, I think that would be more worrying. But look, yeah, we can get some more downside because we've got this trend line here. I think we're looking at about 1680 or 90 roughly is that level. So that is the potential downside, but whether it goes that far, it doesn't have to go that far either. But that's what I'm thinking. But yeah, look, the clock is ticking now and we want this thing to start turning around. One of the things is that sentiment is pretty low at the moment. And there's lots of talk about, you know, a gold bear market and lots of people are throwing in the towel, I'm hearing. And I think a lot of people would have had their stop losses at that 1750 level. And what often happens with gold and silver is that those well-known stop loss areas tend to be wiped out. And then, so once all those weak hands are flushed out, price just turns around and just starts moving up. Because basically when price turns around, the market wants to take as few people with it as possible on the way up. That's my impression still. And the other thing to remember is that this is the paper price. The physical price is doing something quite different, I think. The premiums are still pretty high, and I'm hearing from some places it's quite difficult to get hold of gold as well as silver. Right, let's move forwards to the GDX. And so this is the GDX on the monthly scale. So again, it's just looking back from a distance. And I think we've got this rounded pattern again. So it's similar kind of to that curve that we had with gold. Obviously, this is an anomaly here, which kind of messes things up a little bit. And again, this move was pretty rapid, and it was a big move going up here. So, of course, whenever you get big moves, you get punishment. And this is the punishment that we're getting. Now, that's quite a lot of red candles here. It's unusual to have so many bunched together. If you look back at the chart, I think the last one was here, really. That's the equivalent. But again, it kind of looks like a flag pattern, I guess. And we really would need to see price turn around here for that to kind of be the case. Now, I've drawn this red line across here, and you notice that I drew it just to hit the tops of those two highs there. But price has gone below that. But remember that you're going to have greater support when you've got these solid bars. And we're kind of at that level now where we're just starting to get some of the solid bars. Now, I've drawn this blue line here at 28.92, where there's going to be more support, basically, based on having more and more solid bars there. But we had one viewer who mentioned something interesting, and they were talking about a Fibonacci retracement, but looking at this on the log scale. And what happens is, if you put this on a log scale and put the Fibonacci retracement tool on here, but there's a special button that you can press to adjust it so that it accounts for the log scale. And that shows support at the 30-something% Fibonacci level, and that's at 30.7, which is around where we are at the moment. And so apparently that's supposed to be a good support area, and an area where price often corrects to before turning around. Now, I did have one question, if anyone knows, is when do you use that log adjusted Fibonacci level versus the Fibonacci levels on the linear scale? What are the applications of that, and what situations would you use that in? Because if you do the Fibonacci on the linear scale, you're going to get a different number for that. So yeah, that's interesting there. So basically, we're looking for support within this zone here, and ideally a turnaround. Let's see what happens next week. And finally, we have the SILJ, and this is on the weekly scale this time. So again, I'm just trying to kind of stand back. When you're so close, looking on the short-term, daily scale, some people look even on the hourly scale, sometimes you kind of lose sight of where we are. You kind of don't see the wood for the trees, I guess. Now, one of the things I was looking at here, so I'm working on the idea that, and it's not shown on here, but if you zoom out and look on the monthly scale, we've kind of got this compressing pattern with the bottom and top shown by this black line. And yeah, I'm working on the idea that price is going to break through that and move up. I'm not seeing any drops down here, but look, it's not impossible. But just the way prices is for silver and the silver miners, I'm still bullish on this. I would change my mind if price broke through this level over here, which is about 13.5-ish. So, I mean, there is still room below for price to drop, just as there is with silver, but not a lot. And we do have support over here, which is roughly where we are at the moment. So it would be nice if price bounced off of there and started making its way up again. Do you remember when I was drawing the curve here? And so I think I'd drawn it something like this. And then, of course, it failed. And this is just an example of how patterns can look very obvious in retrospect, but while they're forming, you don't know exactly what pattern it's forming. But not only that, you don't know the proportions of that pattern. And if we stand back and look at this, I mean, and I kind of basically just stood back and squinted at it a little bit. So if you just account for just the bottoms of these bars here, maybe that's the curve there. I've just kind of been premature in the curvature there. I don't know, maybe that's a bit far-fetched actually, because you're kind of cutting off wicks like this and so on. But yeah, I don't know. Anyway, that still looks to me like a healthy consolidation on the bigger timescales, and I'm hoping that this is going to be support and we move upwards. Well, anyway, it's going to be an interesting couple of weeks. In particular, I think March and May are going to be big weeks because, of course, those are delivery months. And so there's going to be something to look out for. But I wouldn't get too stressed about the paper price. Well, I'm not getting too stressed about the paper price because what we're seeing at the moment is something strange that's occurring. And, you know, people are saying they haven't seen this in decades, anything like this happen, where you've got something different occurring in the physical market to what the paper price is telling you. Anyway, last week was great. We had some fantastic comments there, and I thoroughly enjoyed looking at the comments section. We had some very sweet, lovely comments to me, but we also had some really good explanations of various aspects of the analysis, particularly of that gold-silver correlation coefficient. And we also had someone who was almost, poor guy, I think he was almost embarrassed that he was investing in things other than gold and silver. Look, there's absolutely nothing to be embarrassed about. In fact, I expect you to be invested in assets other than the precious metals. I only talk about gold and silver here purely for the sake of focus for the channel, but that doesn't mean that I'm fanatical about it in any way. You know, if I think price is going to dump, I'll just say so, you know, and the time will come where we will see a price dump. I just don't think it's going to be a particularly large dump right now. But yeah, it will come, and that's purely because of the volatility in bull markets. And I'm actually going to do a show on that later. That's it from me for this week. All the best and see you next week. Bye.